And good morning. It's Tuesday morning. It's the 26th day of July. Already this month is just about finished. That always means at the end of the month that there is a potential for something they call window dressing on Wall Street. We'll have to see if it may support stocks in the final business days of this month of July that's now coming to a close. Summer is just flying by. And the market today is having some trouble, some difficulties, and that's because of some of the earnings that have come out that have been less than spectacular. And just before 10 o'clock Eastern Time, Dow Industrial's down by about 76 points, so at 12,517 level for the Dow. And just scrolling down to the S&P 500, right now the SPX is, where is it here? It's at, SPY is at 133.36 is what I'm seeing here, and a reading of 1332 for the SPX, though my data vendor shows it as unchanged, which is not the case. The S&P 500 would be lower as well, as SPY is down by 0.5 points at 133.33. And one of the problems is Minnesota Mining and Manufacturing, and that company known nowadays as 3M has disappointed Wall Street analysts. LCD TVs are not selling as well as they should be, and so 3M has reduced its guidance for the entire year. Now let's take a look at where Minnesota Mining and Manufacturing is trading. 3M is one of the Dow components, important, and so it's down by 3 points at 91.55. So that's a 3.7% decline for a Dow component, and a roughly 3.5 point drop in a Dow stock is equivalent to about 25, almost 30 Dow points. So a good chunk of today's decline for the Dow, where it's down now by 76, is because of 3M. Another big victim on the earnings front is Netflix. Earnings are down. The guidance is down. This is because they opted to very sneakily raise prices. The stock is down by $26 now, $255, and so that's about a 10% drop there for Netflix, saying that it does see signups at this point fading out just a bit because it did a surprise price raise. Now, I haven't sent out very many videos, and that is due simply to the fact that nothing really has changed with respect to Washington. The ongoing scary stories continue about default. I have been in that there will be no hard default camp for some time. I'm still holding on to that, though there is the suspicion now that likely the credit rating agencies will have to do something with respect to the AAA rating if they go back to not doing what they said they were going to do with a complacent AAA rating, though they will lose all credibility. So they're in a catch-22 situation. S&P and Moody's and Fitch. Egan-Jones is already lowered, and so has Weiss, but really it's those three big credit agencies, S&P, Moody's, and Fitch, that really matter in this sort of thing. And so the market volatility will continue. It's very helpful for gold, all of this ongoing Washington hijinks. Gold is down 30 cents today at $1,612 per ounce. But no doubt with more QE3 coming, and with the ongoing spending situation in Washington, what it is where they can't even come up with a decent number of revenue cuts, and also they have trouble with the whole concept of certain revenue enhancements and closing tax loopholes, etc. Well, the price of gold is going to benefit from this, and indirectly QE3, if it does come along by this fall, is probably going to have a very positive effect on the stock market once again, as weird as that is, and as just atrocious of a situation as that is, that money printing and all that sort of stuff is going to continue to push the stock market higher. So that's where it's at for this morning. A couple of sour earnings reports, and we see stocks lower today, along with the ongoing DC melodrama. That's my brief Tuesday market comment. Have a great day.